Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 13th of April. Starting off with the S&P, but it's looking a bit tired at the moment. We've been in that range between 40.70, 41.30. Not much to say at this stage, but obviously we don't really want to see an end-of-day close back below 40.70 because that would bring in the prospect of a test of that rising 50-day moving average at 40.30. We're not really expecting any downside to be less than 40.30 on the basis that that is rising, as is the 200-day moving average around 39.55. But obviously that could happen given that we did actually fail below the 50-day line back in February, March when that was rising too. But the fact that the 200-day line is now rising gives this still a reasonably steady look. On to the stocks, and starting off with Anixa Biosciences. Here we've got a nice little breakout there, breaking that line of resistance from October. So the $5 level, the key level there, top of the channel there from back in September as high as $7, and we can see that ideally by the end of next month while we hold above the $5 area. Double bounce there of late off the neutral RSI 50 level, which tends to be a continuation signal. And that little bear trap below the rising 50 and 200-day moving averages as well has given this stock decent momentum. And on to an AI situation, which some people may be following, BigBear AI. Here you can see that shares are just toying with the 50-day moving average. Resistance there towards $3.20. Want to see an end-of-day close through that. The next level up, obviously, $3.75, which was resistance on the way down. But overall, over the next 1 to 2 months, we are looking for the top of that rising trend channel from the beginning of the year as high as $6.80, maybe by the end of next month. But obviously, the key thing here is unless we get through $3.20 pretty quickly, that scenario may be rather optimistic. Moving on to another mover and shaker of the recent past, Bullfrog AI. Here you can see that we've got that U-shaped reversal. Nice rebound there off the neckline resistance, March resistance around $4.30, and now pushing again through the old February resistance around the $6 mark. The longer we stay above $6, the greater the chance of a move up to the top of that rising trend channel from February as high as $10 over the next 1 to 2 months. But the key here is really looking for $6 plus to give us a momentum push through to $10. On to Dragonfly, and here you can see that shares look as though they are staging a turnaround. We've got bullish divergence there, an uptrend line in the RSI window with the lower lows, but higher RSI trace. Broken that line of resistance there from last month around the $3.50 area. And the longer we stay above $3.50 in that broken triangle, the greater the chance of a move to $6, ideally by the end of next month. Be cautious as you wait for the RSI to get back above the neutral 50 level as a momentum signal on a potential move higher. But the key here is to hold around 350. On to Freight Technologies, and here we've had decent recovery off the lows. That was a bear trap rebound from below the old December support area around $1.80. Let's call it. Above that, we've broken the 50-day moving average, closed above it around $2.70, and looking for $4, the top of that broadening triangle from February as soon as the end of next month, ideally even, I suppose, by the end of this month. But let's be cautious on that. Next stock is one that I covered a few days ago, Guardforce AI. I love these AI situations. Here we've had a beautiful move to the upside, breaking that resistance there from back in February, $23.70 by quite some distance. Shares in a rising trend channel from back in December, top of that channel heading to $40. Could see that by the end of this month, especially if we can notch up decent days over that $30 level. Moving on to another near-term decent gainer, we've got Glucotrak, and here I've got this what looks like a mid-move consolidation either side of the 200-day moving average. That's the black line there at $2. Above $2 on an end-of-day close basis, we're looking for the shares to progress to the top of that broadening triangle from the end of 2021 as high as $5.50 by the end of next month. So expecting quite a lot there after that bear trap rebound from below $1 that we had over the course of March. New name next, and a decent mover as well, obviously. T-Stamp, here you can see that shares have tried to push off the lows there. Looks like a broadening triangle rebound, quite a hefty one there, quite a hefty bounce there. Closing above the 50-day moving average. That's around the $3 area. Let's call it $2.90 for stop loss purposes, and above $2.90 looking for the 200-day moving average initially over the next couple of weeks at $4.80, and then 1 to 2 month target as high as $7.50 at the top of that broadening triangle from back in November. Looked at Nextplat quite recently, and we're back for more. This looks like also a bull flag situation, a consolidation there above the 200-day moving average. As long as we stay above that at $1.90 or so, the greater the chance of a move to the top of that rising trend channel from September at $3.50. We're looking for that by the end of next month, while we hold above the $2 area and that 200-day moving average. On to Pulse Biosciences, which has also appeared here quite recently. Here we've got a situation where the shares are making a beeline for the initial target we had there at the top of that broadening triangle from August. That target there around $5.20. Above that, then there's another line there from last year, from basically this time last year, heading towards $6. And ideally we see that as soon as the end of this month. That sort of U-shaped bull flag breakout, a nice feature on that chart. Just 3 stocks to go now. First one is a new one, Solid Biosciences, which is trying to live up to its name. Here we've got that broadening triangle reversal there from November. We've broken a line of resistance from February. That was versus around the $4.60 area, and above $4.60 we're looking for the top of that broadening triangle at $9 as soon as the end of next month. Obviously the initial task there is to get through $5.60 and the 50-day moving average. But at least while we're above $4.50, $4.60, the upside seems to be relatively assured there. On to a stock which I have covered of late, Scilex Holding. Here we're just going into a golden cross situation there, so the 50 and 200-day moving average both rising and ready to cross. $20, the top of that rising trend channel from November. Ideally we see that as soon as the end of this month, while we hold above recent support around the $13 mark. Finishing off with Silo Pharma, which has or is trying to break through the 50-day moving average. Here you can see that we're in a likely triangle reversal situation. I suppose it could be drawn as a rising trend channel as well, so that's the floor of the channel there. And that support line there, which the shares bounced off last month. An end of day close, or the end of the close that we've had above the 50-day moving average, could then allow us to retest the brief spike in February towards $4 over the next 4 to 6 weeks. $5, the end of May target if everything goes well from here. That's it from me today. More updates tomorrow.